Panjwani are requested to be in the hall. We are about to begin the third technical session. Friends, we are beginning our third technical session. The topic is Audit of Accounts and Reconciliation with Books. I request Shri Bharat Satdev to escort our chairman for this session, CA Ashok Chandak, to the dais. I again request Shri Bharat Satdev to escort the speaker for this session, CA Rajat Talati, to the dais. The other dignitaries are requested to take their seats on the dais. It is a matter of great privilege to introduce our session chairman, CA Ashok Chandak. CA Ashok Chandak is a senior partner of Shah Baiti Chandak and Company Chartered Accountants, Nagpur, and has been practicing as the head of Indirect Tax Division since 1977. He was the president of Institute of Chartered Accountants of India during the year 2002-2003. He was also the president of South Asian Federation of Accountants, SAFA, the apex body of accountants affiliated with SARC for the year 2003. He is the founding member of Government Accounting Standard Boards, a member of National Advisory Committee on Accounting Audit Standards constituted by Government of India in the year 2002-2003. He had contributed in various international and national conferences, seminars within and outside the country, and also participated as the head of delegation from India in the 11th World Congress of Accountants and for the Conference of Government Financial Officers Association, USA. He has a unique honor to his credit for delivering annual taxation oration of the Institute of Chartered Accountants of Sri Lanka in 1991 at Colombo. He is the first Indian to deliver such an oration. With a great round of applause, we welcome Sir. Our speaker for this session is an interesting and multifaceted personality. Shri Rajat Talati has 30 years of experience after completion of Chartered Accountancy in 1986. He has concentrated practice on the sales tax side, presently advising several leading Indian and foreign companies in the sales tax and GST matters as a retailer. He is a business consultant for various clients and is conducting GST impact analysis of various corporates and MNCs. He was the president of Sales Tax Bar Association Maharashtra for the year 2004-2005, has co-authored Guide to Wealth Audit and issues on MWEalth Audit, and also has contributed articles and regular columns published by ICAI, STPAM, AIFTD, etc. He also has done research projects on incidences of sales tax on plastic industries in various states of India. A nature lover, a tracker who has tracked the Holy Kailash and Mansarovar, an amateur photographer. Here is a multifaceted personality in the form of CA Rajat Talati. We welcome you, sir. Please welcome him with a great round of applause. At this juncture, I invite the chairman of the session for his introductory remarks.
Good evening, friends. This is the last session of today's management. This session is devoted to audit of accounts and reconciliation with books. In the context of GST law, audit of accounts we know everybody. It's not an issue. In the context of GST law, what is the importance of audit? What is the importance of reconciliation of the accounts? That is an important. GST law has already occupied the central stage of India's indirect taxation. Prior to this, there used to be multiple taxes. Everyone of us knows. A lot of taxes are subsumed in GST. Therefore, as has been pointed out in the last session also, there is a lot of borrowing from various old statutes in the GST law, and lot of concepts are developed. Old concept of manufacture, sale or services is not there. Now concept is of supply. When we talk about supply, there are a lot of things. Not only sale, services or manufacture. So many things are there. We will not go in that part. With the introduction of a GST, what is more important is filing of the correct and complete returns. Practically, there is going to be no assessment of those returns which you have already filed. Assessment could be there, but it would be in exception cases. Therefore, how do government ensure that whatever returns filed by a taxpayer are correct, complete, and at least he has not suppressed any transaction in returns vis-a-vis the books of accounts. Transactions which are suppressed in the books of accounts, no one can find out. But transactions which are disclosed in the books of accounts are correctly taxable and correct tax is paid on that is required to be verified by someone who should be an independent. And that's why this job is entrusted to the independent auditor who may be a chartered accountant or cost accountant. Both of them are basically trained in the area of verification of books of accounts. Now, verification of books of accounts not only simply a ticking of vouchers or checking of vouchers, etc. It also involved a verification of systems, verification of the mechanism by which the taxable turnover, or for that matter the entire turnover, is being determined. This process is really required to be established in the organization, and the auditor plays a very important role there. So far as the dealer is concerned, auditor is a friend, philosopher and guide. This is an old saying. Therefore, he has to help the dealer in devising the system, in finding out how the correct returns are filed, and see that there is no underpayment or overpayment of taxes by the dealer. Same is also the task entrusted on an auditor by government. That is to see that returns filed are correct and the taxes paid on that are also correct. When you need to find out returns filed are correct or taxes paid on the turnover declared in a return is correct, it really involves a lot of verification. Maybe a judgment of the auditor also on a particular transaction. Section 35 says that audit of accounts should be carried out by a person whose turnover is above certain limit, and that audit report along with the reconciliation statement be annexed to the annual return. Now, annual return format and audit report format differs. Annual return gives entire summary of whatever you have filed in last 12 months. Audit report, you need to give the details, rate-wise, and when you need to give those rate-wise, you need to look into classification as well. All these is a matter of learning, and to explain all in relation to the reconciliation statement and audit of accounts and difference between the report and the certification which the auditor is required to keep at the end of Form 9C. We have today with us Chartered Accountant Mr. Rajat Talati. I have seen his presentation and he has prepared a detailed presentation. Therefore, I reserve my other comments for a concluding part, and I state the request to Shri Rajat Talati to make his presentation. Mr. Talati.
Good evening, friends. At the outset, I must thank all the host organizations for having given me opportunity, and of course to the chairman sir for such a sweet introduction to the subject which has laid down the foundation on which I would attempt to build something on it. The agenda is in a way very short but requires a long discussion. What are the provisions? What is the difference between a certification and forming an opinion? How does a certificate differs from expressing an opinion? Preparatory work, reporting, reconciliation statement, and finally some information which is available on the government platform, the government domain, how much that would weigh in the minds of the auditor so as to form an opinion or to decide for reporting it as an observation, qualificatory remarks, or just a statement of fact. Let's look at the provision. Friends, some of these provisions require interplay between a couple of more provisions, so I will have to take them together. Precisely what we are looking at is maintenance of accounts and auditing of those accounts. Section 35% talks about maintenance of records and accounts under the GST Act, and 35.5 provides for a case where the registered person, those who have been practicing on the VAT front are used to speaking them as dealer. Pardon me if I slip and talk about the word dealer or an SSE. SSEs are universal term and no offences. A registered person whose turnover exceeds 2 crore, the prescribed limit, will get his account audited by a chartered accountant or by a cost accountant. What he has to submit? He has to submit audited accounts, reconciliation statement as per section 44(2), such other documents as may be prescribed. When we are talking about 44(2), what we are essentially talking about is the annual return which is given and the reconciliation statement which is to be prepared. Let's look at what is 44(1) talks about. It says annual return to be filed by every registered person other than. So who is required to file an annual return is prescribed under section 44(1). Input service distributor, he is not supposed to file. A person paying tax under section 51, a TDS deductor, or a person who collects the tax, TDS collector under section 52, a non-resident taxable person or a casual taxable person need not file the annual return. Rest all has to file annual return irrespective of the turnover of the that particular SSE. It has to be filed by 31st of December following the end of the financial year. It has to be uploaded electronically. Now let's look at 44(2). Persons liable to audit under section 35(5) will have to file annual return. So annual return is prescribed in section 44(1), that is GSTR 9 along with copy of audited account, reconciliation statement reconciling the value of supplies declared in the annual return prescribed and other particulars prescribed. So what is the job of an SSC who is covered by section 35(5)? He has to ensure that he gets his accounts audited and he has to furnish an annual return with a copy of audited accounts, the reconciliation statement as per GSTR 9C, which reconciles the value of supplies which he has disclosed in the returns already filed, and other particulars. Now all these is the responsibility of the SSC, the registered person. If that be the case, first and foremost is the auditor is not supposed to furnish. Auditor has to carry out the audit and furnish the reports to the management. It is the responsibility of the management to upload the audit report. Practically, what has been done all this while under the VAT Act of all different states is the auditor would also undertake the uploading of the return. That is part of the understanding between the auditor and the auditee. The law has been under the VAT Act as also under the GST Act. It is the responsibility of the SSC, the registered person here, to upload his audit report along with the ABC document that we talked about. The Rule 8I3 has prescribed Form 9C, which is now notified. We had a lot of speculation about the design of Form 9C before we actually go through Form 9C. What was being circulated before the notified form came in was a huge volume of the form that one was really scared to even go through, and last till page number 84 of those compilation. Well, that was the ultimate objective possibly of the legislature, to take you through that level. In the nascent stage of the development of these GST Act and the rules, this is what the abridged version of the audit report. Of course, the scope is too wide. I'll just make that statement here. We will explore the form as we go further in the presentation. What is trying to say is the form which was being circulated, which was being in the private circle discussed also, was the very long form which required the use of entire concept of GST to be touched upon by the auditor to form an opinion and submit that report. However, one cannot forget, when you do the audit as prescribed under Form 9C, the auditor nonetheless goes through the entire process which was being discussed in the long Form 84. There you are supposed to tick mark. So I would rather say that is a checklist which is available to you in the past. Use that check mark checklist to design your audit program. Based on that audit program, possibly you will be as an auditor in a position to form an opinion and give a certificate, as also give your judgmental opinion about the particulars which you have certified to be true and correct. Now this is what the form looks like. Let's say form has two parts. This is an overview of the form. First part is reconciliation. Now once again, there is the design flaw, if I were to say. I may be permitted to use certain words here because I am talking within the closed doors here. Here they have put in the cart before the horse. The reconciliation statement comes first and then comes the report. Report is part B. In between you have instruction. I don't know. Was it a copy-paste mistake, or it is by design, or the person who wanted to notify it by putting it on the website was not given clear instruction? God knows. God help the best. The reconciliation statement. What is the scope? Scope of the audit is to verify the correctness of the tax liability. Now I have made a very sweeping statement here. Scope of the audit is to verify the correctness of the tax liability in respect of the annual return which is filed in Form 9. This statement is based on certain findings that you all will travel with me to come to this conclusion. the auditor is required to determine the tax liability from the books of account of the registered person. Now one would say the reconciliation statement is nothing but a journey from point A to point B. It is a journey from destination A to destination B. It is like a bank reconciliation statement where you start with the balance as per books of accounts and reach to the balance as per passbook or the bank statement. It is much more than that. If you were to see the reconciliation statement does not tally, you fail in that accounts paper. Don't you agree? But here we are, where you have a reconciliation statement, which talks about unreconciled item. What do you mean by that? That means there are certain things which ought to be part of my books of accounts which has missed out while filing the annual return, which has been missed out by filing monthly return, which has culminated into an annual return. And that is why I say it is not a mere reconciliation statement, which is the notion which is carried by several of my professional brothers. Let's look at the report now. The certification in cases where the reconciliation statement is drawn up by the person who had conducted the audit. It talks about certification, where two situations. One situation is where the books of accounts are audited by the person who conducts the audit under the GST Act. The situation 2 is the case where the books of accounts are audited by some other auditor and the GST audit is being conducted by a third person who is a GST auditor. Now in these two situations, a certificate is required to be made and a report is required to be signed by the auditor certifying inter alia the particulars as mentioned in part A to be true and correct. Besides, also certifying that there is no concealment made. Now that is a big statement. That means nothing in the books which ought to have been picked up as turnover, what is in the books which ought to have been forming part of my valuation, nothing in the books which ought to have been considered as supply is missed out or is concealed while filing the annual return. That is what is the scope. Let's look it further. It is a journey of exploration and we all will take that journey together. I will put the horse first and that is why part B to be discussed first. What is the scope of the audit? The scope of the audit is to report on maintenance of. Now we are talking about now maintenance of books of account, records, document as required under the GST law. What are we required? We are trying to see the maintenance of sufficiency of the records, documents as also books of account which enables a person to draw, compute, determine the turnover, the taxable turnover and the tax liability under the GST law. In the erstwhile form 704, there were pointed questions like whether the turnover which ought to be picked up for the transactions concluded during the years have been correctly reported or not. Here they simply said, is the maintenance of records sufficient? What do you mean by sufficient? The sufficiency ought to be measured in terms of its possibility, in terms of its inability to get a person to arrive at the correct turnover under the GST law. It has to meet the expectation of record keeping under the Act, rules and the notification. So if the notifications requires that a builder who is constructing the affordable housing ought to have classified his turnover of sales based on the eligibility of the particular buyer of flat as an affordable category or not, whether he is falling into ELSS or not. That documentation is also part of verification. then only he can certify and report about the sufficiency of maintenance of accounts. Now what is he has to say and what is the area of reporting? Reporting is his observations about the sufficiency, insufficiency or the lacuna or the shortcomings in respect of maintenance of accounts. He has to comment where there is shortages, slippages or non-maintenance. If my books of accounts, which also includes my e-way bill records, do not reconcile with my turnover as reported in GST R1, as reported in financial accounts, I cannot handpick certain records and say this much records are sufficient. No, I have to see the entire gamut of records, including the stock records. Section 35(1) talks about maintenance of records, and it talks about records which comprises manufacturing record, stock inward-outward records, as also the import. It also talks about services await, inward, outward, etc., etc. All these taken together forms the part of account. The accounts also includes accounts maintained in a digital format. So all these constitute the broad framework of accounts which requires to be examined by the auditor to form an opinion about the sufficiency or the shortcomings of those records. If there are discrepancies, these also requires to be pointed. What do you mean by discrepancy? How will you come to a conclusion where there are deficient? Only if you have formed an opinion about it, would you come back and say, look here, these records are not sufficient, there is deficiency in maintenance of records. If a registered person were to give certain quantities of articles as gift and there is no record thereof, what do you say? There is insufficiency, there is deficiency in the accounts. How would you arrive at that conclusion unless you have seen the stock account or you have verified as a part of your audit exercise about the internal control system to have picked up the goods which is distributed as free? How would you come back and say that whether the valuation system is correct unless you have studied the system and its implementation in terms of picking up the value for the purposes of computing the tax thereon? Whether my invoice generating system is sufficient enough to pick up value of the goods as also value of the transportation, which is in a case of a composite supply, is picked together for the purpose of computation of output tax. Now, for that reason, I will have to see the systems and books of account. That means the scope is this particular clause, the scope is respect of maintenance of account and its sufficiency or deficiency thereof. Of course, issuance of debit note, credit notes, the valuation issues would all get picked up here because this is where as an auditor you would have studied this system, you would have studied the methodology in which the data is derived for the purposes of compilation of your return. Now, picking up data, downloading it, compiling them, because I understand and fully aware that in the first year everybody's systems were not that ready. So there would have been a lot of data massaging as they call it. Once the data is raw data is picked up from the system and thereafter there were templates made wherein the data was then put it up, cleared, cleaned, and then they were used further for filing of the return. What is the methodology followed? Is it consistently followed or in the month of July, August, whatever you had, you filled up? September, October, you improved your system. November, December, there was further improvement. January, your system was ready. Do not simply restrict yourself to January or today's system to say that, yes, I formed an opinion that everything is fine. Please understand, this was the year of learning for everybody, not at our offices of the clients also. So they were also evolving, they were also learning, they were also developing. So the part is, these particular things will require examination at various levels. Simple example of picking up the freight charges along with the dispatch of goods. The valuation or the picking up the taxable value for the purpose of raising an invoice in case of service industry is also very, very peculiar. whether the reimbursement of expenditure was part of the original contract price and ought to have been added, or was it an obligation of the recipient which the supplier has taken up? Who will examine that? Whether the system is been designed to raise certain question, otherwise the billing clerk, as he is trained to that extent, would have simply said next, and the invoice would have been drawn, and the report of course would be based on the invoice which is raised. Now one will have to study that. If it is not clearly coming up from there, yes, as a system deficiency, one will have to point out this issue and take things further. Now, what does it say? The further certification is documents which are required to be furnished under section 35(5) and reconciliation statement in form 9C are annexed. Now, what is it saying? It is saying clearly the certification part. We have obtained all the information and explanation which, to the best of my or our knowledge and belief, were necessary for the purpose of audit. Information and explanation which, to the best of my knowledge and belief, were necessary for the purpose of audit were not provided or partially provided for. Now, this is what the part 3B of the audit report talks about. That means I am supposed to see and form an opinion whether the explanation which was required to be given to me as an auditor was sufficient, whether the documents provided to me as an auditor is sufficient enough to draw an inference, draw an opinion, draw a conclusion, make a judgment as to whether the determination of turnover. Of course, I am using the word determination. There is no word called determination in the entire form, but it boils down to that. What does it say? The turnover which is worked out, computed, I was enabled by the explanation which was provided to me as an auditor so as to come to the conclusion about the determination of the turnover or the computation of the turnover, which to the best of my knowledge and belief were sufficient, or they were not sufficient to the extent. Moreover, it says, in my overall opinion, proper books of accounts have or have not been kept by the registered person so far it appears from the examination of the books of account. Once again, there is a repetition of the certification which is going further. It says, I will certify that the balance sheet, profit and loss account and expenditure and the cash flow statement are in agreement with the books of accounts maintained at the principal office. Now, this is what is a sweeping statement. Now, here is a case where the auditor is the same person who has conducted the statutory audit, maybe under the Income Tax, maybe Companies Act, maybe Trust Act, maybe Societies Act, or maybe any act. The books of accounts are already audited, and the person who now conducts the audit is the same person, and he now certified that the books of accounts are in agreement with the statement which is flown below. Para 4 talks about the documents required to be furnished under 35(5) and reconciliation statement required to be furnished under section 44(2) of the CGST Act is annexed herewith in form 9C. This is a statement. Yes, whatever is required, I am now annexing. I am attaching these documents in form 9C. Now, what further it says? In my opinion, and to the best of my information and according to the explanation given to me, the particulars given in the said form GSTR 9C are true and correct subject to the following observations. Now he is saying that, look here, as an auditor I have formed an opinion to the best of my ability on the basis of the information which is provided to me, and certify, report that the particulars given in Annexure 9C is true and correct. And if there is some observations, some qualifications which are there, these are enumerated as under. A, I need to form an opinion. Opinion can be positive or negative about the conduct of the audit and the sufficiency of the evidences or the supportings which are given for verification during the process of audit, during the exercise of audit, based on which I formed an opinion and say, subject to ABC given here and under, I state that the particulars given in the statement which is annexed to form 9C, which is in part A, is true and correct. This is similar to a certification given in form 3CD. Form 3CB, as you know, talks about a report where the auditor, the tax auditor as we call them in loose term, under section 44EB gives his report and certifies the particulars given in form 3CD are true and correct. It is this same analogy coming here. When you talk about true and correct, for last how many years, since 1985, since the tax audit is introduced, we have been talking about, and we have clearly not understood, but we have digested the concept of true and correct certification. And true and correct surely connotes a very big responsibility, much more than a simple word called true and fair. The onerous duty cast upon the auditor is to certify these particulars as true and correct. We will come back to it a little later. Now let's understand what is the difference between a certificate and a report. A certificate is a written confirmation of the accuracy of facts stated therein and does not involve any estimation or an opinion. Please understand, when I talk about a statement to be true and correct, what do I mean? Is that it is not only true and correct, it is accurate. It is arithmetically also correct. And there is no iota of doubt or an estimation involved in it. It is based on the facts which is produced before me. I say that this is true and correct. It is not based on just an opinion. When you draw something as true and fair and certify it or report it as true and fair, you are forming a judgment, you are forming an opinion, and then you report. When you say a certificate, what are you giving is much more than that. You have formed an opinion about the sufficiency because that is how you are trained as an auditor. To form an opinion, take a reasonableness of the records which are kept into account. When you have that comfort as an auditor about the security or the methodology of drawing, maintaining the records, you have now come to a stage where you can now certify. Based on this examination of books of account, I come to the conclusion that the figures reported herein are true and correct. There is no estimation involved. A certificate cannot be based on the estimated cost of production. Certification has to be based on actual. A chartered accountant or a cost accountant cannot issue a certificate about estimation of cost of production. He has to have actual factual numbers to talk about a issue of a certificate. A report, on the other hand, is a formal statement usually made after an inquiry, examination or review of specified matters under report and includes the reporting auditor's opinion thereon. Opinion, as I said, is based on certain examination, review, and a formal statement is made saying that in my considered view, as a tax professional, we know that when we issue an opinion about taxability or non-taxability of a particular transaction, we do take professional care to form an opinion based on the facts of the matter, based on the law it governs, our own judgment, the past history about it, and then we form an opinion and then issue on a piece of paper or give it out orally. Now, this is what is just an opinion for which you require that professional competence to form an opinion. Of course, knowledge of law, knowledge of accounts, knowledge of auditing techniques, etc. are definitely to go hand in hand. Now, what is observation or an opinion. Certificate, observation and or opinion, which is what is required by an auditor to give. He has to give certificate, observation and or opinion subject to non-maintenance of records, document, etc., compliances, shortcomings and deficiencies of the same. If we have discussed it a while back, the auditor is supposed to draw his own opinion about it and report subject to ABCD of non-maintenance of records. Like if the records in respect of documents which are necessarily required for the dispatches between these two states of a distinct person is not properly maintained, because obviously the goods when are dispatched from head office to branch or from branch to godown, etc., it is a part of the memorandum register. It is not part of my financial books of account. If there are not sufficient, one will have to say, look here, these set of documents are not sufficient, or I am unable to form an opinion, or my opinion form is subject to this broader observation, or this is subject to this qualification. We will talk about what is qualification. The certificate opinions are subject to only to the above. No need to observe or opine or other issues or data unless has a bearing on the conclusion which is drawn. What am I trying to say here? The auditor is not called upon while he conducts his GST audit to give an opinion other than in respect of the above, which is maintenance of accounts, shortcomings, deficiency of documents, etc., which enables him to compute the turnover, compute the reconciliation statement, compute the taxation or the taxable turnover. However, if such finding has a bearing to form his opinion, he should certainly take cognizance of the same. Unless that is taken cognizance, you are actually defeating the very purpose of the conduct of audit. One will have to take into account those aspects, small things which built up to the forming of an opinion. If one loses the sight thereof, one would be leading to a wrong conclusion. When you have the phrase called subject to, it connotes qualificatory remarks which affects reporting. What do you mean by that? When I say my report is subject to ABC, what does that subject to mean? But for this, my opinion would have been this. But for this, I would have not concluded this. ये है, इसके लिए मैंने ऐसा बोला है. मैं पूरा बोला, पर ये नहीं बोला. Subject to this. What do you mean by that? Because that subject to leads you to some qualification. These are qualificatory remarks which has a bearing on the reader. Reader read these qualifications to take the report with a pinch of salt. He understands, yes, there are certain reporting which is subject to my re-examination if I were to take a decision based on the report. So here the tax official, the appropriate officer as we call them, will read my qualification to say, alright, this case requires to be picked up for scrutiny further because the auditor has given a qualificatory remark saying that he has not maintained this, his valuation is flawed, his time of supply is flawed, and that is why these qualifications will give them to the picking of the scrutiny assessments. Now observations in contrast can be general observations, like in a case of say amalgamation, there is no the form does not talk about amalgamation and how do you report them. So in such a case, what do? In the observation, you will have to give, this is a very important information. In the VAT period also, in Annexure K, we had in the guide note which was published by the institute, has categorically picked out certain observations which peculiarly you do not have space to report, but these are vital information which requires to be brought to the notice of the user of the report. So such amalgamation which took place for financial books from an earlier date, because the High Court order would have come after, let us say, 8 months, 9 months, or maybe after the cut-off year end, and the effective date is much earlier, so your financial books of account would have factored them. But your GST, the way the Act is designed, would have continued to treat both these entities as separate entities for the purpose of the outside world. Now that is a very vital information. You will have to pick up those observations here. There could be some observations which are drawing attention. What do you mean by drawing attention? The user of the report is alerted. Your attention is drawn to so and so, which may require the user to take an appropriate call. These are attention drawing statements. Disclaimer. What do you mean by a disclaimer? Saying that the auditor is not in a position to form an opinion because of these reasons, and hence this audit report is to be understood in this fashion. Disclaimer. Not able to decide a particular issue. It is not necessarily the entire report he is not able to form an opinion. For a particular issue, there could be a disclaimer. That is what is required to be reported as part of observations. Now when we have remarks, we must understand qualificatory remarks are to be reported at one place and quantified. Now that is what the auditing standards provide. Statement on qualification in auditor's report issued by institute in para 4 of part B says some qualifications may be reported both at paragraph 2 and 4. Now this is what I am trying to say. The institute has issued, I stand corrected when I say para 4 part B, I am referring to form 9C. The institute has prescribed that all qualifications to be clubbed together at one place, they need to be quantified. What do you mean by quantified? You need to quantify the quantum of the tax impact, the quantum of the turnover and the quantum of the tax impact because of such observation, such remark. They have to be clubbed together at one place. You cannot write one in para 1 and the other in the para 4. No. All qualifications need to be given. What is the objective thereof? The objective is very simple. The user of the audit report has to find all the qualification at one place so that he does not miss out on the very vital information which is part of the audit exercise. In para 4 of part B, such qualificatory remarks needs to be reported. Friends, I am aware about the timeline and the constraint that we have, otherwise I would have gone back and forth onto the form and explained to you para to para, line to line. But the time constraint with this jam-packed program that you have for these 2 days, I am refraining from going into every part. Some qualification may be reported both at paras 2 and 4. Because there are certain observations you can give it in part 2, because maintenance of books of accounts, some qualifications could be there, not having revenue implication can be reported in para 2. But with the revenue implications, you ought to report in para 4. There could be non-maintenance of records which is not, which is having also qualificatory computational impact, will have to be reported in both places with appropriate cross-references. Today the form as it is designed has given you only 3 rows. I do not know when the digital utility comes in, you may have more lines to add, or there could be constraint of 30 characters per line, I do not know. One will have to see how best one can have these done. However, the observations which are only to be drawing attention to, maybe simple, saying that there is not been sufficiency of records in respect of say dispatches to branches, etc., which do not have necessarily any tax implication, may be reported in para 2. Tax impact thereon should be reported along with the qualification, even though in reconciliation statement it would get reported. What am I trying to say? There are certain observations which would ultimately get reported into reconciliation statement, which will form part of my unreconciled amount, for which reasons would be given in the next paragraph. Para 5 to para 6 I will give, para 7 to para 8 I will give this information, para 9 to 10 I will give that unreconciled item, the explanation. But all these items put together has to be reported in my body of audit report, which is in part B. Now that is where the qualifications and the reporting aspect required to be put in. All these nuts and bolts get computed in the various tables, which actually helps the auditor to finally compute and give their tax impacts at the respective places in part B, which is body of the audit report. Now let's get started with the audit exercise. First thing, for any audit, be it your statutory audit or any other audit, you must know your client. An auditor must know the business the client is, his organizational structure, his business model. I am not writing long because I understand we have those who are practicing on the income tax side or doing a tax audit or statutory audits or other VAT audit. We have done this exercise all these years and we have been trained for all this. What is important to note is typical inward and outward supplies. There are certain subtle transactions which does not get reflected so easily in the books of account. One will have to really have an interactive session with the client to try and understand the model. What is the business model? Do you dispatch directly to the institution supplier? Do you have a super distributor, then distributor, stockist, and then the retailers? What is the system? Do you have separate channel for institutional supply? You have separate channel for the big format stores? How do you do it? Do you have a separate centralized office for catering to your large clients for providing services? Do you enter contract with the head office for pan-India services? How do you do it? Your business model is must to understand. Next point, the past history regarding the disputes with the tax authorities, the valuation dispute, etc., is very, very important wealth of information. As we have talked about, this is a khichdi of various earlier indirect tax laws. Some concepts have been borrowed from A, some have been borrowed from B, and some have been borrowed from C legislation. If that be the case, all these three put together has a wealth of old judgments, wealth of old litigation, and the approach of the tax authorities or the appropriate authorities during the relevant period under the relevant act, which can help us to understand the businesses and the expected areas of verification and the expected area of litigation. As an auditor, one will have to take a stand, one will have to take a position for all these issues. It is not necessary that the auditor will follow the tax authority's decision and go above. He may have his own independent view on the subject. The auditor may take an absolutely different view, different than the SSE, different than the tax authorities. However, whatever it is, auditor would take a very considered position after taking into account the factual part, the legal past, the legal judgments and its bearing under the GST Act, etc., etc. Of course, the way the business is transacted cannot be left out. There are different income streams. Friends, now supply is everything is on the credit side. That is outward supply. Inward side, everything on the debit side. Now one will have to actually tick mark and say this is not. Other than that, everything is. One would say depreciation is not my inward supply. Similarly, on the income side, we'll have different income streams. There could be product sale, there could be service sale, there could be loose accounting. What happens is pure labor receipts are at times reported as sale. We are used to these loose terms being used by the businesses, and the general use is income from operations. Fair? Thereafter we will have to go to the subgroupings to find out what are the different elements of these income streams. There will be several miscellaneous income, other income, miscellaneous income in the other income, and the subgroupings, because we do not require separate reporting as per the accounting standard. All these could have been clubbed together as one, but we as auditors under the GST Act have to treat them differently based on the nature of receipts. Now that aspect will have to be understood first. Heretofore, a VAT auditor would simply look at, is there any involvement of goods? है ना? देखो, बाकी सब भूल जाओ. That is not the case. When you are talking about a contractor the understanding of accounting is of paramount importance. I will touch upon these few of these accounting standards just for the sake of highlighting my point that these are so very important to understand before you actually pick up the turnover as per financials. Otherwise, reporting the very first number in the form 9C will be faulty, and that will result into faulty reporting down below, because the form is auto computation down below. If you start with the wrong number, all the additions, subtractions would go and lead you to a number which is unexplainable to you yourself. Let's look at further. The annual maintenance contract. Now, there is a different treatment to be given than the job work receipts. Now, job work receipts also, that could be a situation where job worker uses the main inputs from the principal, but is required to use his own packing material for carrying out the job work, and after that he need to pack that. What is this treatment given by it, and how it is treated by him, whether it is a composite supply or not, whether there were two supplies, this, that, etc. Whatever position is taken by the, I am not here to discuss on it because that will be diverging the subject. However, one will have to take that call and take it further. The biggest question would be always whether the transactions which have been entered into were composite contract or a mixed contract. Here, the auditor will be required to go into the contractual agreement, the terms of the contract between the supplier and the recipient, at times little further than that, to try and understand the object and the intent of the contract, to find out whether it is a composite contract or a mixed contract. My learned friend Mr. Venkat, when he was talking about valuation, he touched once only to find out what is the intent of the contract. He was talking about composite contract vis-a-vis mixed contract. And typically business transactions are complex. Typically one will have to find a real thin line of difference to travel from mixed to composite or composite to mixed supply. Because you take this thing as an annual maintenance contract for simple air conditioner, to annual maintenance contract for software, to annual maintenance contract for complex machineries, or operating and maintenance contract coupled with an annual maintenance contract of what we call any manufacturing facility, operating, maintaining, manpower supply and maintenance of contract, maintenance of machinery. Now one will have to see and actually go into the contractual obligation to find out how is this treated in books of account, what is the true nature of the transaction, how it ought to be treated in the GST regime, and then the reconciliation will serve its purpose. Reconciliation is not merely an arithmetic accuracy. It is not merely an arithmetic exercise to travel from point A to point B. It is not. Now, one will also have to understand the sales and distribution model. I just touched upon inward, outward inputs, basic raw material, packing material, services consumed, etc. Whether he is conducting manufacturing himself or whether there is a third party manufacturing, whether there is outsourcing of services. Let us say I am a contractor, I am a service company which carries on the what we call is space contract services. I have Indian Oil as my customer, which has installation all over India, and I enter into a contract with Indian Oil at Mumbai head office. Now, I have different models to service these contracts. I will have my regional offices, I will have my branch and location offices, I can have project office inside the Indian Oil plant, I will have some services being outsourced from local vendors. I must understand all this thing to see and examine even the cross charge. How will I come to know unless I go into the nitty-gritty of the contract and its execution? All these things require elaborate discussion, and of course, as I said, know your client first. Now getting started. Oh yes, I need to rush now. That is what I said. I requested the organizers, when you are giving for audit, at least 2 hours are required. But with the constraint, I will have to understand this. Let's look at the first number. State-wise GST and unit-wise reporting. Simple statement. First line and you are stuck. my accounts are nationally audited. I have maintained my accounts on a national level. What is this gentleman doing? Good. My accounts are nationally audited. Obviously, I have my accounts maintained at a national level. Maximum for segment reporting, I would have my accounts maintained to enable the auditor to draw a segment-wise reporting. Now, let us say I am manufacturer of chemicals. I manufacture fine chemicals, I manufacture bulk drug. So simple, same plant manufactures both. I have 3 plants, I have 5 offices, regional offices, and I have 10 branches all across the country. Now my accounts are nationally maintained. I am supposed to pick up a number because I must get, I am a auditor who is auditing under the GST Act for the state of Maharashtra and state of Gujarat. I have been assigned only to audit Maharashtra and Gujarat. The other states, others are doing it. How do I pick up this number and report here? Does my accounts directly help me to do that? If I were to simply put up the accounts and report this number here, am I doing the correct thing? If I read the instruction, it says the auditor will have to derive that number from the available records which are maintained by the SSE. Meaning thereby, auditor will have to understand the methodology and the system employed by the registered person to ascertain how he compiles his accounts, how he draws trial balance. If he does not draw trial balance on the state level, if he has segmentized accounting, how it is finally compiled and reported in the financials. What system does it have which generates the statewide information? It could be MIS report, it could be state code wise report, it could be report based on compilation of number of sub reports based on which he would compile his monthly return. The same methodology will have to be not only examined, try and improve upon and find out what is the number to be reported here. The GSTN, the council, when they designed this form, were aware about it, and hence the instruction they said that this number will have to be derived from the accounts which is maintained. Now let's take a case where the auditor under the GST is a different person than the auditor under the other company. Will he have access to the information from the other auditor? Answer is no. Why should the other auditor share his information? Would the auditor have access to the centralized accounts, or will he have access to the accounts which is limited to the state? Answer is yes. He will have access limited to the purpose for which he is assigned the duty, for which he is appointed. In such a case, a management representation letter giving the explanation and how this turnover for the state is derived by the system will have to be taken from the client, and it would be part of my basic records which are required to be maintained. I have touched upon very briefly about the maintenance of audit file. Now state-wise turnover, there is going to be real good challenge, and access to the data, as I mentioned, is very limited. Now we have another challenge, accrual system of accounting. We all chartered accountants, of course the lawyers are excluded for the time being because they are not subject to GST. We all chartered accountant, cost accountant and practitioners who exceed the particular limit are required to get ourselves registered, and when they exceed the 2 crore limit, will be subjected to GST audit. We professional maintain account on cash system basis, and the GST reporting is based on accrual system of account. How do you do that? First challenge. Service tax में भी यही धमाल थी. We used to continuously maintain that reconciliation. Same धमाल continues. One will have to see that. Now, when I talk about accrual system of accounting, I am also aware about the treatment for advances. Of course, there are specific clauses in which to report the opening advances and the closing advances. Agreed. The advances treated in books of accounts, advances as per contractual obligation, could be two different understanding. as an auditor, we will have to clearly pick up what is advances under the GST, what is advances treated under the books of account. Opening and closing advances, thereafter one will have to take appropriate numbers. Running bills, here is the time of supply issue. For a contractor, a works contractor, a building contractor, I am not talking about real estate developer, that is separate. A simple contractor issues a running bill. He recognizes that revenue only when the bill is certified, which is correct. However, at times, he has to provide in the books of account based on the work which is carried out. However, bill is still not certified. So, in the books of account, there will be income which is recognized by way of a provision, which is unbilled. And in the GST, the time of supply still not occurred. So, there will be once again a disconnect. Understanding of accounting is very important here. Leasing company. Financial lease vis-a-vis operating lease. The challenge again, who accounts this as an asset, who accounts this as an income, who claims depreciation, all these things will have to be looked into. So when you report the turnover in the first column, the GST auditor has to have a detailed working of every line item with explanation, because today not only you, tomorrow your peer auditor is going to check that. The peer review, when it happens by your fellow chartered accountant, is going to check that again. You may be then wearing a different hat when you go to the tax authorities for what we call is that departmental audit or the assessment. Revenue recognition. Once again, accounting standards and its application. Provision of expenses. It is quite possible I would have provided for certain expenditure. The invoice is not received by me. Invoice is received in the post what we call year end. But in the books I have already provided for such expenditure. One will have to really pick up those provision entries also and give appropriate consideration before reporting. The valuation challenges are many. We had a full 1.5 hour session on it, so I will not talk about place of supply. Do you think the GST auditor is called upon to examine this? If you are to read this verbatim, you will not find any single reason to say that you are called upon to report. However, the auditor is required to report additional tax liability arising out of the audit exercise. The provision under the GST Act say that if erroneously IGST is charged instead of CGST as GST, one is supposed to pay the CGST IGST and claim refund of the IGST. Meaning thereby auditor has to pick up that report as a differential tax liability. Unless you examine that, how will you do it? For the, once again, going with the system to find out the master which is created for picking up the correct levy of tax. All the software, small and big, maybe it is your Tally or your Trio to your SAP, all system require configuration. If that configuration is correctly done, the system would have picked up the levy of IGST vis-a-vis CGST, SGST correctly. So as auditors, we will have to see. At the same time, I must caution you here, there are systems which would have been in between amended, in between updated, corrected. However, these systems will not have any audit trail to examine from what date these corrections have been made. Your masters would have been amended. How do you check on it? A simple suggestion would be to pick up 1 invoices after every 15 days of different streams of income. To try and pick up, ये days के अंदर कुछ error है, go a little further. This is part of auditing exercise. One would expand the size of sample as you unearth certain uncomfortable findings, as I put it. Time of supply. Now, time of supply is so very important, and one of the examples which I gave was in respect of the works contractors invoicing. Now there could be n number of things. Let us say unbilled revenue in respect of monthly supplies to ONGC. Let us say I get a contract to supply regularly to ONGC on a monthly basis, but the the billing cycle is 5th of every month after the month is over. Meaning thereby I keep dispatching the goods and on 5th next only my time of supply happens. That is my billing cycle. Now that be the case, there will be a disconnect. There could be milestone payments based on happening of certain events. My accounting could be on the basis of provisioning, based on activity which is already taken place. There could be n number of issues in respect of classification of classification of goods or services, or whether it is goods or services based on Schedule 3. Now sampling etc. is important thing. There are certain accounting standards one will have to really go into it, and its applicability level 1, 2, 3 etc. one will have to really see. Now in AS is also in force. One cannot say that in AS would also not have its impact, so one will also have to look into that. Now these are just listing. I will request you all to just have a look at them when you have time. Table 5. I will touch upon certain. How much time do I have, sir? 10 minutes. All right. Now, what is the design is this way. When you talk about table 5, we start with determining the turnover. Table 5 helps you to determine the turnover. When you go to the table 5, what are we essentially doing is trying to decide the turnover of the financial records, and now you arrive at adding and subtracting it to the turnover as reported in the annual return. Now that reconciliation is an exercise of examination. Now it has to find out what is as per books and what the GST auditor perceives as the correct turnover. Perceive is also a very broad term. He understands as the correct turnover. Here there are certain terms which are interchangeably used. I have not touched upon it. Aggregate turnover, turnover and turnover as per books. Now these three terms will have to be understood in the perspective in which it is mentioned. When you read the instructions, one would say, should I read the instruction or should I understand the form per se? I mean, some professionals believe that the instructions are only aiding, and the other section of the professional believe that instruction actually directs me to follow the same. Friends, please understand, Form 704 under the Maharashtra VAT Act had a categorical statement saying that I have understood the instruction and I have read it and I have understood the instruction. No such certification is required by the auditor. However, one cannot ignore it. These really bring about the minds of the drafter of this form as to what is expected from the auditor to report here. Of course, at certain points, it has certain reporting requirement which may not directly appeal to you as an auditor. However, one may have to understand whichever is feasible to be implemented, which is logically appealing you to be correct, you please follow the same. However, please do not ignore the instruction per se. The Institute of Chartered Accountants of India as also the Institute of Cost and Works Accountants of India would come out with the guidance note which will help us to, as a fraternity, to follow the instruction, because those guidance notes are mandatorily to be followed by all the auditors who sign off the audit report, because that is a mandatory thing. Now, after the exercise of what we call additions and subtraction, you will come to the amount called amount as ought to be reported in the annual return. What is reported in the annual return and the balance is the difference. Let's look at some important numbers. Turnover of quarter 1 of 17-18. Very simple. These being the first year, 16-17, you are supposed to reduce from the annual account, which is for 12 months period, to find out what is reported under the earlier act. Let us say this company is a manufacturer of goods as also provider of services. So in the first quarter they would have been registered in service tax also and under the VAT Act also. They would be registered under the excise also. So they have filed the required returns under the respective enactments. Now what turnover do I pick it up here? Now that depends on what have you selected and determined or reported in the first para 5A. What you report in 5A will decide what statement, what numbers you pick up from the various streams of income for the first quarter to get reported in the column, in the what we call is column G of the table 5. Now there will be several adjustments which are required. Those adjustments you are carrying out for the remaining 9 periods. Similar adjustments will have to be factored into in 16-17 and the 17-18 first quarter to हाँ उसके हिसाब से आपको उसके लिए डालना होगा. Now what am I trying to say is the treatment that you have taken in the first quarter is to be the same as your treatment you are given to decide the 12 months reporting in table 5 first column, I mean first row. That is what is required to be understood. There will be a cases where the goods were dispatched in the first quarter, they were returned in the subsequent quarter. If they were B2B transaction, you would have considered them as a fresh inward supply in the GST part. However, in the financials, they would have been recorded as goods returned. Similarly, debit note, credit note in deficiency of services, that would have been factored as what it is in the first quarter while filing the service tax returns. One will have to take appropriate stand, work out all these adjustments and then only report the first quarter figure. सर हमारे पास 10 मिनट है, हम लास्ट में बोलेंगे.
लास्ट चीज ये है कि दोनों वेट पीरियड का और ये 3 क्वार्टर का दोनों के टर्नओवर इंक्लूड होगी कि नहीं होगी?
सर वही तो बात है. आप
नहीं वो माल भेज दिया और आगे
एक सेकंड. इशू इज इन 5A if you have reported all 12 months data considering various income streams and you have reported this number, let us say 1000. On the same lines, applying the same principles, you will decide the turnover of first quarter. Taking into consideration all the adjustments which are required. Otherwise, you will end up in reporting wrong number.
it will be included in turnover note.
वो हाँ या ना आंसर नहीं होता सर. One will have to actually find out how have you reported 5A. Based on which you will say if you have included all these turnover. Now one will have to actually see आपने रिटर्न्स में क्या बताया था. वैट का रिटर्न के अंदर तो आपने उसको गुड्स रिटर्न क्लेम नहीं किया है, आपने उसको जीएसटी के अंदर इनवर्ड सप्लाई पकड़ के लिया है, तो आपको क्या करोगे?
2 crore का जो डेवलपमेंट है ये वेरी
अच्छा एप्लीकेबिलिटी ऑफ जीएसटी ऑडिट की बात कर रहे हैं. नाउ द वे टुडे द थिंग्स आर, आपने अभी 704 का देखा होगा एप्लीकेबिलिटी ऑफ द, उसमें बता दिया डिवाइड बाय 4. सो 25 लाख महाराष्ट्र के अंदर बोल दिया कि आप ले लो turnover के लिए और then you go for the applicability of audit for the first quarter. However, there is no such clarification which has come how to make this applicability. So there is no way one can say that. Me saying it is proportionate has no value because there is no enabling provision me to take up similar position. In VAT we had a turnover which is to be considered proportionately. There is a provision in the MVAT Act. There is no such provision under the GST Act. I cannot do that way. So the GST Council will issue some clarification on this. We talked about unbilled revenue, unadjusted advances. These are the advances. We have opening advances as well as closing advances. Both will get reported. Deemed supply. Mr. Venkat was at great pains to talk about distinct person transaction, valuation issues, etc., etc. One will have to understand that and get it reported. Now credit note adjusted in books after financial but claimed in the annual return. Now this is very peculiar. There will be certain credit notes which have been issued after the year end in the physical, but they have been provided in the books of account. You have claimed them in the GST return for the period April 18 to September 18. So While in the annual return, you have adjustment in GSTR 9 about the debit note, credit notes subsequent to the March month, which is adjusted till the period of September 18, till you file the annual return. Now, all these will get adjusted. However, in the financials, you have either considered them by way of provision or you have not considered. Based on the actual facts, one will have to take the call and report it here. Trade discount is the word they have used it, but what they meant was discounts. Trade discount is never part of the revenue recognized. These are catalog discount and it never gets recognized as revenue, and it was very clearly understood. Possibly this is a slip. It should have been discounts, as simple. Now, reasons for difference. What you have it once you come to the taxable turnover, the next flow is the taxable turnover, and then you find out what are the deductions which are available. There is a long debate which requires to understand what is exempted, what is nil rated, what is non-GST, what is non-supply, and what is zero rated supply to get reported. This is a topic by itself, which is a technical subject. And turnover where recipient paying tax on RCM will have to be reported. Of course, when you require to report unreconciled amount, meaning thereby there is something more than just a mere reconciliation. This is what, when I say you report unreconciled and give reasons, as an auditor your findings will come here. This is table 8. Now when you go for tax payment, I will now rush actually. Late fee, interest, etc. Now here there is tax payment. Would you include taxes which are paid after the annual return but before uploading of the GST report? Now this is what it is. There is a little doubt here. If you read the instructions, it says taxes paid. As an auditor, I know these taxes are paid. Which are paid? Including paid after the annual return is paid. Let's look at the other practical difficulty. I had forgotten to report certain transactions of supply in the month of October, November 2017, which were noticed while filing the month of May 18 return. I would have paid these amount by adding into my GSTR 1, adding this as part of 3B and reported and paid as May return. How will I report this amount as paid? Challenging. Amount is paid. If I do not show them as paid, this will end up asking the assessee to pay it again, which he has already paid. As an auditor, how do I say that out of the 10 lakhs which is paid for the month of May, 1,25,300 pertains to my October and November 2017. So I will have to go to the next year's GSTR 1, find out that, inquire about it, make a pivot to match. These transactions were left out. This is now picked up here. Match, next. I will also have to study his GSTR 9 which is filed by him. Try and ensure that this is reported correctly in GST 9. Then only I will be able to do it. I will have to maintain elaborate working note to ensure that a backup paper is available to justify my picking of those numbers. When the GSTN cross-checks this number with the system, would they have any number directly available? Answer is no. You will expect a query, and this query will happen in 9 out of 10 cases. Because everybody has missed, they have forgotten to pay taxes on account of RCM. The ocean freight is the biggest example. People have taken different positions, finally considering AR, IR, Lena, nahi Lena, finally some clarification, people started paying. People have paid just before filing tax audit report. I don't want anything like 43B to be hitting me. All these positions, how do as auditor, I will say as taxes paid. Now, when you have the unreconciled amount of taxes paid, this is to be difference between liability worked out by the GST auditor and the amount which is actually paid, and you will have to report the differences. Now, these are the additional amount which are required to be paid but not paid. We will have to give rate-wise breakup. Challenging. When you say rate-wise breakup, I have to find out. When I say rate-wise, would it include my classification related issues? Answer is yes. Why? Otherwise they would have asked me rate-wise breakup. If it were to be simple arithmetic accuracy, they would have stopped there. Why did they ask me rate-wise? The reason is very simple. They want to go beyond what is available, what is understood on the surface. And thereafter I need to work out interest and penalty and others. Penalty, of course. Auditor is not the person who can report. He cannot levy. He cannot initiate penalty proceedings. However, if there is a proceedings which is already initiated, penalty levied, paid, not paid, will get reflected. Now comes ITC. ITC availed as per books of accounts and claimed in annual return. ITC, when we talk about, we are talking about a very important aspect. ITC availed, ITC available, ITC reversed, ITC blocked, and finally ITC which is available or non-available, or eligible or non-eligible. Now unless you have the entire ITC working available, you will not be able to find these numbers to get reported. The entire table 12 talks about ITC which is available and claimed, available but blocked, which is reversed, which is non-eligible but claimed. So all these will get picked up and finally reported. Of course there is an adjustment of the earlier year claimed in the subsequent period, etc., based on the GST or 3B. Once again, I would have forgotten to claim certain 3B, but now after the 2A which is downloaded, I realized that certain accounting were not mapped in the system, and so the ITC thereof has missed out. There were certain errors in the implementation. There were certain shortcomings in the system's implementation, and large corporates have missed out certain ITCs. Those ITCs are now being claimed. Of course, they would have claimed it before 30th of September, or they will claim it by 20th of October while filing the September returns. All these things will also get factored into. So, do you think that the auditor will not necessarily restrict his findings or examination of records only to July to March, or will he stretch from July 17 till September 18 returns? Friends, one will have to see that also. And if the client is little hesitant or reluctant to share the data for the subsequent year, saying that, look here, I have appointed you as an auditor only for the year 17-18, we need to be, you need to be adhering to your brief. That time you will have to bring to that notice that, look here, these are these numbers which requires to be reported, which will require me to examine the data for the next year as well. All this requires to be examined. The transitional credit. Now this transitional credit also is to be picked up from Tran 1. Now in books this could have been claimed in the earlier year, surely. Either it could be claimed in the first quarter or in the earlier years for which the credits are being continued. So those numbers will also have to be checked. Whether, and now this typically happens in respect of the stocks. Let us say my stock is 7 months old. In the month of July, I have, on the 1st July, Tran 1 is filed and I have claimed them. So, this credit, I would have claimed it in the year 16-17. So, there is no trace of that in the financial books of accounts for 17-18. Forget about even first quarter. I will have to pick them up, take appropriate, cross-check them and appropriately report the same. Of course, reasons for unreconciled differences could be disallowances or block credit on account of credit note issued for scheme discounts, etc., year-end schemes, etc., with this thing, etc., and capitalization of depreciation of capital goods, etc. Friends, there are a lot of things to speak, but we have paucity of time, and I want to hear my chairman first before I cut down. At the same time, I must thank all the organizers for giving me this hearing, and you all for a patient hearing. Thanks a lot.
Thank you, Rajat, for your excellent presentation. Thank you, Rajat, for your excellent presentation. I think you made my job easy. I have very small things to conclude. You are not asked any question to me. Therefore, I have hardly anything to reply. But first, I would like to reply the question of Mr. Sharma. Mr. Sharma raised the question whether the April to July turnover will be excluded for the purposes of determining 2 crore turnover so as to decide whether the entity is liable for tax audit or not. Now, if you go to section rule 80, sub-rule 3, it's very clear. Every registered person whose aggregate turnover during a financial year, and financial year has been described as a April to March.
Under GST.
Yes.
Under financial year under GST.
Whatever the case may be.
But the previous 3 months,
That will stand included. That will stand included, and even VAT audit and VAT turnover and GST turnover total taken together, if it is exceeding 2 crore rupees, GST audit will have to be done. This is the first issue which I thought I will answer. I do appreciate Rajat's point that Form 9C is not a simple reconciliation. It's not assuring an arithmetic accuracy. Lot of verification is involved. Auditor's opinion is called on so many issues, and therefore it is definitely an report. Yes, there are certain statements which are required to be certified as a statement of facts, and on certain things, auditor is required to give his opinion. At the most, you can say that it is a mixture of certificate and opinion. But opinion element is definitely there, and therefore it is definitely a report. It is not a bare reconciliation statement, or it is not a reconciliation simplicity statement. One more reason I would like to add for coming to this conclusion. As I pointed out, Form 9, that is annual return, and Form 9C, reconciliation is required to be done in Form 9C of Form 9 and the annual books of accounts. Neither Form 9 nor your books of accounts shows rate-wise classification. Now, if rate-wise classification is required to be determined, you will have to do the verification, and when rate-wise classification is required to be determined, you will have to go for classification, you will have to look into the valuation, everything you will have to look into, and you will have to report accordingly. Therefore, it is not a bare reconciliation statement. One very interesting point which was raised to me by some people. You see the provision in section 44 AB under the Income Tax Act, where it says that if the audit of assessee is done under any other act, the required particular in Form 3CD should be given with the report in Form 3CB. Now, 3CB form does not talk about true and fair view, while Form 3CA talks about true and fair view. Therefore, where the audit is already done under any other act, under the Income Tax Act, you need not, as a tax auditor, you need not report on true and fair view of the state of affairs of the organization or in profit and loss account. That is not required to be given. But if report is to be given in a 3CB, these things are required to be certified. Now, the exclusion of those words, what difference it makes in GST Act? GST Act nowhere says that if the audit of accounts are already done under the under any other statute, you need not give a true and fair view. You have to give the report. You have to give the report. Now, if you go to the certification part, you have two kinds of certification, as has been pointed out by Mr. Talati. One is a certification by the same auditor who conducted the audit of the entity, and one is a certification by another person who has not conducted the statutory audit. Now these two certificates makes a difference. While an auditor who conducted the statutory audit and he is also conducting the GST reconciliation, he is required to give the true and fair view of the balance sheet and state of affairs. While other auditor conducting the same audit is not required to give the true and fair view. Therefore, a person who is conducting a statutory audit as well as GST audit will have to give the report twice, true and fair view twice. One in a statutory report under the Companies Act or under Trust Act or under any other law, even income tax law also. And secondly under the GST Act also. This may kindly be taken note of. Rajat has mentioned that we'll have to verify the account from July to March. Not only July to March or July to September, he posed the question. According to me, in order to comply with this form and determine the correct liability and point out what is the tax liability and make your recommendation what is required to be paid by the assessee, you will have to verify April to September. Then only you will be able to know, and then only you will have to you will be able to point out the correct things. As I mentioned earlier, audit is required to be carried out by the independent person, not associated with the enterprise. Now, association could be in a various forms. In even International Accounting Standards Board or International Federation of Accountants has already mentioned about the independence. So many things they say that this will impair your independence. Most of those things are provided by the institute in its guidance note, in its guidance to members, not guidance to GST audit, but its guidance to members or independence of auditor and all those things are there. All those restrictions will apply even for a GST audit. Very recently, Institute of Chartered Accountants of India has issued guidance that an internal auditor should not carry out the GST audit. Employees will not be in a position to carry out the GST audit. GST audit can be carried out only by a person holding a certificate of practice, and that too a full-time certificate of practice. If somebody is holding a part-time certificate of practice, he would not be in a position to conduct the GST audit. Associate concerns employees are also barred from conducting the audit, statutory audit. Same will also apply to the GST. There are so many things which are there. We have a paucity of time, but I would say that form as we have today, Form 9C, has certain defects. Possibly we will have to bring these defects to the notice of the council or the notifying authority and point out that this notice needs to be cured. No doubt this form will be revised in next year, because next year there will not be a first quarter turnover. So definitely it will be revised in next year. A small defect I can point out in Form 9C is about rate of tax. You have been asked to determine the tax liability rate-wise. Now, in GST law, more particularly in case of leasing companies, where the leases are given prior to 30th June 2017, The rate of tax is reduced by 65%. And that rate becomes a fraction. That fraction you cannot find anywhere. To report that rate wise turnover, you don't find any place in your form 9C. There are several things which over a period of time, form is received very shortly, very recently, and the Institute of Chartered Accountants Audit Committee is deliberating on it. They will find out what are required, what are not required. They will also guide the member. They will also inform the GST authority that these are the amendments required. Possibly this form will be revised shortly, but till that time you need to take care that these are the minimum information which you will have to give in a GST audit report. 31st December is the last date. Whether it will be extended or not, that I can't say right now. VAT audit, you have a 15th January in Maharashtra, but so far as the GST audit is concerned, you need to complete the GST audit by 31st of December. I think with this remark, I would close.
In case of different auditors, GST audit and statutory audit, if there is any conflict among the certification work and the GST audit work carried out, what is the solution to that?
In a case of different auditor, a different auditor is commenting only in relation to GST. In GST, not on true and fair view.
Yeah.
Not on true and fair view of the company. Therefore, whatever he wants to comment in relation to GST, he would comment and his comment will.
In this case, what the institute will take the cognizance of both the auditors.
Both are doing on.
One is quantifying the correct liability,
Yes.
another is giving the correctness of the certificates. And if there is any conflict in between two, what will be the solution?
Materiality concept will come.
And
Materiality concept will come. If the observations are of such a magnitude, then definitely it would be a case for some professional.
being the past president, what is your opinion?
Definitely it will be a case for.
Or further investigation.
Section 45 states that you shall submit a copy of audited and reconciliation statement. 44 also states that you have to submit a reconciliation
See, there are two
Part
provincials.
C, heading state that is a reconciliation statement. Part B is they have specified that you have to maintain books of accounts, you have to give reconciliation statement, you have to certify particulars given in 9C. So where are we determining the turnover or tax liability? Means from where are we getting this? Can't we see under the VAT audit we were to specify that we have determined the turnover, we have determined the tax liability. Here everywhere it is reconciliation statement. Means is the government intending us to say that you reconcile and then we will determine what is the turnover, what is the tax liability?
How do you
Because as you
reconcile?
said, there are two types of
To
professionals.
answer the question, how do you reconcile the rate-wise tax liability?
That is just when there is an unreconciled turnover.
No.
In the part
No.
five,
You
Tax
see the part.
auditor's recommendation, point 5.
No, that is something different. Point 5 will come later. After 3.3, reconciliation of rate-wise liability and amount payable thereon. Point 3.11.
That is the reconciliation of tax pay. That is just a reconciliation of tax pay. And wherever they are,
Below that, after reconciliation of tax paid, what is written? Reconciliation of rate-wise liability and amount payable thereon.
Yes.
And here there is only one column, and they determine the auto people of total tax payable as above, and then paid as per GSTR, and then the difference is worked out. So firstly, you have to work out the tax liability as per books of account, as per you there, and then only.
I'll just add to what Sir has said because his word is final here. What I state is, if it is a reconciliation, there cannot be any cause or difference. As I said in very subtle way, in accounts paper, if you are not able to reconcile your bank reconciliation statement, you get 0 mark. The very fact that there is a room for unreconciled and the reasons to be reported, it says that it is not mere arithmetic numbers that you are working. You are going a step further to ascertain from books of account what ought to be reported as turnover, what ought to be reported as taxable turnover, what ought to be reported as tax payable, what is paid, what is the difference, and the reasons for the same.
Sir, there can be a scope for reconciliation because in annual return 9, GST are 9.
There could be some arithmetics which I missed out. I appreciate. There could be just 2-3 such examples which you really find out that in 9 also you have missed out and now you are reporting. That is not the idea of reconciliation. Now, there are a few friends of ours who have been having this notion. Please understand, it is not that we are sitting into the chair of a adjudication officer. We are not doing it. Nor were we doing it in VAT. Nor were we doing, or we have been doing it since 1985 for the 44AB reporting under income tax. What is happening is, this information is served on platter for a tax authority to take cognizance of these reporting, rely on certain findings and take appropriate action. I cannot levy penalty as an auditor. So that is what I mentioned a while back. I am only reporting what is levied. I am not sitting on to the cause of levying penalty.
See, again I would just point out, table 9Q. Table 9Q, total amount paid as declared in annual return GST are 9. This is a statement of fact that you can find out from your GST are 9. Now thereafter, if you go to A, B, C, D, E, F, G, H, I, J, K, L, M, N, I, J, K, this is required to be determined by you. Because they say that reconciliation of tax by liability and amount payable thereon. So reconciliation is what is your tax by liability and amount paid as per GST and what is the difference on that. So therefore when it asks you to determine, when you ask you to give the rate wise liability and amount payable thereon, you need to do the classification. Unless you do the classification, how do you point out the correct extent?
Thank you, Chairman sir, for those insightful remarks. At this juncture, to present the memento to our Chairman sir, may I request Shri Bharat Sachdev to do the honors. I would request Shri Bharat Sachdev to do the honors of presenting a memento to CA Shri Rajat Talati. I would request Shri Amod Mani to do the honors of finding out the lucky winners of this session. May I request Chairman sir to just pick up one sheet and find out the winner of the lucky draw. Congratulations, ma'am. I would request Rajat sir to find out the another winner of this lucky draw.
328.
तुम्हारा गजगावती दिल काढू ना
328.
They are journalists, they want a winner. 136.
136.
026.
26. 26.
Rafa 302.
302. Last one or I'm taking over?
Carry forward for tomorrow.
052.
At the end of the session, 2 lucky winners are ladies. That's a privilege. Thank you. I would request Yamul Mane to propose vote of thanks.
Good evening to all. After hearing the Rajat Bhai, we could say that an auditor has to apply all the provisions of Act, Rule, Notification, Circular and Press Release also to our books of account. And then he has to prepare a report from that. It's really a difficult task. Yes, sir. And of course, don't forget to charge proper fees for 1.5 years. In this era of GST, practice really becomes hard and challenging. But with the help of senior gurus like Chandak sir, he gives us a proper light and encourages us with his blessings and knowledge to ride our GST vehicle proper on this difficult road. So I thank you very much on behalf of all host association to Chandak sir, and also Rajat Talati sir has enlightened us with his